There is one fundamental aspect that can make the difference between being a millionaire and not. However, Warren Buffett and Ray Dalio have completely different approaches on that. So what is this critical aspect and how can you use it to become a millionaire? Well, that's what I want to see in this video. There are many differences between Ray Dalio's and Warren Buffett's strategies. But the most important one regards the type of investment and the number of investments made. Ray Dalio started investing during college, and over the years and through the experience he gained, he opened the soon-to-be biggest fund in the world, Bridgewater Associates. And over all these years he focused on risk management, and that's why after so many investments he developed the AllWeather Portfolio, which has the goal to have good performances during all types of market. And he does that by investing in stocks, in bonds, in gold and in commodities. And as you can understand, this portfolio is mainly based on diversification, because the objective, as said, is to manage the risk. And through this type of investment, you can drastically reduce your stress while investing, because on one side you have reduced the risk with this type of portfolio, and on the other side, since it is a portfolio made to be able to perform correctly in all types of markets, even during a market crisis, you will have good performances. Secondly, you can follow different trends at the same time. For example, now you could be investing in artificial intelligence while also keeping a focus on petrol or gold. And also having a portfolio like this one, it gives you a lot of flexibility and adaptability over the time, because the trends and the market situations will change in the future, and thanks to this you will be able to adapt your strategy with a lower degree of risk. And finally, this strategy is perfect for capital preservation, because both in the short term and in the long term, your portfolio will not be highly affected by volatility, and this means that you will be able to have your money back whenever you want it. And so with this strategy, your long-term investment is assured. And it actually needs low management if you want it, because you can do it with ETFs, which grants you the diversification you need in all these types of assets we discussed. And so if Ray Dalio wants on one side to have a well-diversified portfolio, Warren Buffett, the greatest investor of all time, which has a different strategy. He is Benjamin Graham's best student, who already in the 40s made a study about diversification and the impact on the portfolio. And he did that in this book, The Intelligent Investor, which I highly recommend to you. And here he proves that the more companies you have in your portfolio, the lower your performances will be, always going towards the market average, which is great, but not what all investors want. And that's why Buffett, over his whole career, has handpicked good companies to invest in. And imagine that right now, almost half of his portfolio is invested in Apple. And so, through this strategy of stock picking, you can expect greater returns than the average of the market. And you can also analyze in the detail the investments that you're making, the companies in which you're investing in, so that you can turn the stakes in your favor. And this is something that actually with diversification you can't do, because you have too many companies or assets to analyze. And finally, your portfolio stays simple, because you're not going to have too many companies, and this means that you can always keep it under control. Clearly, this strategy requires more time and knowledge, because the risks are higher and you really have to choose the good companies to invest in. But as said, it can really give high returns. And so now the big question: who is right, Buffett or Dalio? Well, it actually depends on you. Because if you want to be a passive investor which doesn't dedicate too much time to investing, while still having an average market return or even a little higher, while also having a low degree of risk, diversification and so a portfolio like the AllWeather Portfolio are perfect for you. But if you are an active investor and you also have knowledge about investing and you want a higher than market return while also investing more of your time in it, it is probably better if you focus on stock picking. But despite choosing diversification or stock picking, you always need a strategy to invest. And that's why you have to watch this video. Thanks you for watching and see you soon.